Welcome back, traders and investors. We have a new Marketfy Maven on the line. That's David Katz, founder of TradingFibz, LLC. David, how you doing this morning?
Pretty good here, West Coast time. Sun is coming up.
Yeah, we got you out of bed early. Where you at, in California?
Out in Arizona. Still hot out here.
Okay. All right, so give us a little bit of your education and your market background.
No problem. I'd say the first education I probably need to thank my parents for introducing me to the concept of stocks and bonds at an early age. For every kid that probably wanted a Tonka truck, for me it was the occasional bond or stock in companies like the Beers that made me first interested in the market. Citizen of the great city of Chicago. Growing up there, I went to the University of Illinois, got a degree in education, followed in the footsteps of my mother as an instructor, and had a passion for the sciences as well. I was always interested in numbers and business from the time of high school, but education seemed to be my path. So progressing through the years until about 5 years ago, I had the opportunity to organize a stock market game competition through my economics class here in Arizona, where I reside. We won numerous of those simulations. I spent 3 years with the Arizona Council on Economic Education after that as the state coordinator for the international simulation to educate students and adults alike here in Arizona, one workshop after another. I must regress to include the fact that after 10 years from college, I decided to return to medical school, where I probably feel that education has given me the foundation to look at the markets in the way I do today. And so prior to the simulation in the classroom with the students, I began my own path of education about 10 years ago, learning about Fibonacci patterns and probabilities in the commodities market. Newspapers like the IBD was my initial start. Yeah, I would probably cut out every single article from money magazines to only realize it was month-old news. Eventually, with my Fibonacci-based trading and the random workshop that rolled through town, the companies like Invest Tools or the Options Console, my success with my students allowed me a platform to speak to the Arizona trading community here through the well-attended IBD workshops. And as always, my only interest was to promote my knowledge and offer my education. As coordinator of the stock market game here in Arizona, I had the honor of attending a one-week workshop at the NYSE Euronext, and from that moment forward, I knew that this was a passion of mine that would lead to something one day. And since that time, about 3 years ago, of leaving the console, I opened an account to trade, began to use Twitter as my platform, became a recommended trader on StockTwits, and used YouTube to share my knowledge. Like many, I probably had a quest for the holy grail of trading until I learned that I need to put all my ideas together into a trading plan, and from that point forward, I've pretty much been a successful, what I call a crumb trader, and opened a trading room to the community free of charge. It was the recommendation of one individual who recommended Marketfy, and here we are today.
Okay, so tell us about your Marketfy product.
Awesome. The first and foremost goal of the product here is to empower the novice to the well-seasoned trader, patience and discipline. It's a key mantra of mine. The second is to mentor the traders on what it takes to identify an intraday trend trade and what it takes to remain in it. If you just take a look at the Russell futures from last Friday, a 207-tick drive down that several of our traders were able to manage emotionally free and with discipline. We have two packages that the traders sign up for. The key difference between the two is that I have a live screen share with a chat room that allows traders to come freely and share their insight into the market. It's a platform where I use the trading room daily to share my entries, making it known that obviously it's each own's risk. Every day there's a video market recap with notations on the charts of why the trade was taken or avoided. There's an e-manual, there's videos for step-by-step setup to charts to taking the trade and management once in. You know, I believe it doesn't have to cost thousands of dollars to learn how to trade. I surely don't claim myself to be a guru of any type. If I can help a trader make $200 a day, that's $1,000 a week, well, you do the math. Even with losses which will occur, which we keep at a minimum, based on our patience and discipline for the setup.
And could you please tell us what your systems are based on?
Yeah, pretty much keeping it simple. I've seen a lot of charts with a lot of indicators. I simply start with a macro view. I take a look at nightly at the big view of the indices. Is it the index futures that I primarily trade? While I believe to know one thing and know it well, the strategy works on all charts and markets. We get an overview of trend direction. We look at the daily, weekly, and Fibonacci targets. I combine daily momentum and price action to see if they are in unison. Where the swing size 4-hourly target is a key foundation in my trading. Whether it be on a range or daily chart, I use Heikin-Ashi candles to determine direction in a trend. So to give you the big picture of the gestalt, a combination of Fibonacci extensions, Heikin-Ashi bars, and moving averages on the micro view, as well as to enter into a trade. And the 3 charts we include is a chart number 1, a 2-bar confirmation with an 8 exponential moving average, a second chart with a 534 exponential moving average, and the third is a 513-2180. So the second 2 charts are both on Heikin bars. So to put those all together again, Fibonacci extension, Heikin-Ashi bars, and moving average.
Okay.
I also spice it up with market internals, such as the advancers and decliners and the tick to assist in market direction.
Okay, do you get a trade every day, 2 trades? I mean, you get an entry and then perhaps also a reversal, so this is producing daily trades.
Absolutely. Being a trend trader means, being quite patient, most likely avoiding a lot of chop. That's okay with me. I'd be happy to avoid choppy losses or minimal gains. To have days like last Friday, that would be wonderful. But, yesterday was 3 entries, the longest being 67 ticks, as well as others like Sunday's open as well on the index futures, all 4 of them. That being said, anywhere again from 1 to 3 trades a day. If one trade is in the complete and stopped out numerous times, I'll just simply shut my trading dome down, call it a day. Well, I give back to the market what I've already gained. Wait for another day. As Ben would say, new day, fresh start.
Okay, and so what markets are you applying it to right now?
The futures markets, but this applies to ETFs. It applies to stocks.
Everything.
We pull up stocks in the trading room as well.
Okay, and do you do your own programming, or do you have someone that does that for you?
No, I'm not the programmer. However, there are traders in the room who've have more extensive experience with coding and will frequently volunteer to write based on the strategy. The only programming I do, I say, is I keep data at the end of each day, in particular an average move line up, both up and down, that is calculated at the open price of the market. At this point, the Russell and ETF and futures have a 79% probability of hitting those lines on any given day. So when I could write the code for that, we might have something.
Yeah, that may be the holy grail. So would you consider yourself a black box or a gray box trader?
Well, the bottom line is, and if I understand you correctly, I don't listen to the news. I don't have any broadcasts on. I know what economic data is coming out for the week, for the day. I'm clear on what the big picture is, but the truth is I don't believe there's probably a single person who knows exactly where the market will go the next day. For every person who says it's going up, there's one who says it's going down. I usually tend to avoid the first 30 minutes of trading and not enter a trade until what I call a trade in what I call the daily gap zone. My trading plan is set so that if all my 3 charts that I'm looking at have an entry signal, I'm in. Being a trend trader means that if the momentum is in a certain direction, if the market is in strong buy, I'm in. I'm clear on my entries and determined based on my trading rules. I don't counter trend, so there are times where I sit out in the gray box if the trade is clearly a go. The market is screaming in one direction, but econ data is about to come out, or I'm sitting in a zone which I would consider hands off. I would sit and wait for another opportunity. Bottom line, I trade the charts in front of me regardless what the magic 8 ball says.
Right. Okay. Yeah, I just meant black box. They just boom. They let it run. They hook up their system. They let it run in the markets and just let it run. But it's gray box is much more common. You're using your indicators and then getting into the market. So do you have when you get into a trade, do you have hard targets and stops, or do you try and scale out of things?
Yeah. Once Once a method of teaching traders of how to enter the trade with the least risk, notice the word risk is still in there, is to always have a stop. I'm still amazed to hear how many traders don't use one. So rule number one is to always have a stop, learn to manage it. This is the second part of my trading strategy that we spend time on. If you give an example of a trade where entry is confirmed on all three charts, the trade's in play, the stop will be placed in the most recent swing size, lower high pending direction, usually about 20 ticks. The trade is managed on what we use the Heikin-Aji bar chart, where if trend changes direction, the contracts are removed and a stop is brought to break even or break even plus one. And at this point, it's a no-loss trade. Some traders feel better if they scale out with one contract to 10 ticks, 1 to 15, and keep a runner on. I have no problem with any trade management as long as they have a stop and manage it by removing contracts along the way and protecting their profits and not to give it back. Once again, I can come back to Friday's chart on the Russell. Very easy to manage on the way down. If you watch the Heikin bars and trailed your stop to the most recent swing size high, that's a tick. That was 207 tick move, which by most standards, many would not stay in that long because they kept thinking it might have been too low or oversold. And our room, it was, let's keep going. One absolute target I tend to find works well is probably the average move lines, where more often than not, price action will hit. Perhaps move beyond, return to that line. Other than that, if the market wants to go higher on any given day, who am I to say it's gone too far? There are days where I've literally stayed into the end of the cash close because there was no reason to come out based on my trading plan.
Okay. All right. So it's usually one, maybe two trades a day. Hopefully you get into something and it continues for the remainder of the day. So just going back to that earlier question, as far as how do you determine what you're going to trade today? Are you looking for the best possible setup? Do you trade the S&Ps, the NASDAQ, the Russell futures? How do you decide what you're going to trade?
Well, a lot of the traders in the room, a variety of trading whether they're trading the NASDAQ or the S&P, we have all four charts up. Again, it's very technical oriented, so we're looking for the entry on all three charts. Again, the big picture is planned out, but when that bell rings, we know that it can go the opposite direction on any given day. So we're, again, looking for the least risk entry on a momentum drive, and how do we manage that?
Does your analysis of your data include the overnight session?
No, it does. No, it does not.
It does not. So you don't use that data or try and trade during that time. Least volume. I recommend that you spend your time in the U.S. market where the volume is, especially on the index futures. Can you tell us what you're looking up today? What you got on the screen? What might be a potential trade for you?
Like any other given day, it's all for indices. Right now we could see, there's a little bit of news in the market. Fed speakers are up. GDP at the end of the week, Sunday open came down, and then we had a bounce back up. So at this point, I couldn't even tell you what's going to happen in 15 minutes. This might all turn around. I know that in the big picture, the Russell's really been on a down tear. The downtrend is in play. The NASDAQ being the strongest of the bunch is still upside on the bigger picture. So it's just a matter of where are the market internals, and using those several chart indicators of the moving average. Once the momentum is in play, we'll take the trade in either direction. It doesn't matter which day it is.
And you said that you like to observe at least a half hour's worth of trading, so you're not getting caught up in any of the volatility right off the opening bell.
Absolutely. There's those first 30 minutes, and some traders love to trade those first 30 minutes. A lot of volatility, a lot of action, and sometimes we miss great opportunities of entries. But, I've seen too many times lost. I'd say that's where I lost most of my money, is in those first 30 minutes. If you can avoid those first 30 minutes, you'll often find, you go back on your charts, you'll find that market didn't choose direction for the big picture of the day.
Yeah, everyone has their different time frames. So, any final tips for new traders in the markets? Besides your Marketfy product, any good stories or lessons that you learned the hard way that you like to share with our audience?
Well, probably that first one is that first 30 minutes is a key, and a lot of times I could say the market has done its trading by 9 o'clock, at least West Coast time, or lunchtime on the East Coast. But Sit for that first 30 minutes. Trade minimal contracts in the beginning. If you're learning a new system, I would recommend at least you sim trade in the beginning, not use real dollars. But eventually you have to get in using real cash. But the other one is you have to trade with a stop. There's meeting after meeting I come to that I find traders who don't use a stop. And if you start using a stop, you'll learn that you will keep more profit in your pocket.
Okay, we've had David Katz on the line. He's a Marketfy Maven and founder of TradingFibz, LLC. You can check out his product on the Marketfy page. Well, good luck trading today, David. It's been great having you on, and we hope to speak to you again.
Thank you very much.